Liquidity remained buoyant in Nigeria's fixed income space as the central bank maintained a hold on OMO auctions in the last few sessions. So, what will drive this week's trade at Nigeria's fixed income and Forex market? I am joined by Steve Osho, co-managing partner at Comercio Partners, to discuss this, as well as see market projections. Steve, thank you for joining us on the show this morning.
Thank you, Christy.
Welcome back from the holidays, 4 whole days. So let's take a look at the yields trajectory at the markets pre the holidays.
Pre the holidays, market was actually pretty flat on fixed income. T-bills rates remain around 13%, 12.75 to 13% for most part of the holiday, before the holiday period. Yield on bond remain a bit elevated, around 1450 to 1460 level, and expect market to actually open at those levels today. So
which of the instruments we're seeing interest by investors, the short-dated or the longer-dated?
Most interest actually been going to the short-dated instruments. You've seen so much of home issuance. You've seen a lot of offshore players, and PFAs, and most market players, banks, actually buying in that window. So you've seen more concentration on the short end, and that's explained the reason why you've seen the yield on 10-year notes, 5-year notes a bit elevated.
So what factors would you say have been driving the, should I call it, flat response by investors in the markets?
I think it's a lot of combinations of, we've seen actually between first quarter and the beginning of this second quarter, we've seen a lot of movement in yield. We're talking about movement from 15% levels to around 14 or 13.5 at the last auction that they did on bond. And thereafter, we've seen market actually move from 13.5 to 14% levels. I think it's been a lot of roller coaster in that space. And I think for most investors, they're still looking at the economy, they're looking at the global space, they're looking at the risk and reward, and they're looking at the currency at the same time to actually see where it actually pretends in terms of investment. So you've seen more of comfort around the short-dated instruments.
So talking roller coaster movements, there have been talks by a few analysts who have said that based on the macro indices that you mentioned earlier, investors have been pulling out of the equities market and taking money to the fixed income. Have you been seeing results from that?
I think the equity market since the beginning of this year actually been very, very quiet. In terms of investment going to that space, we've seen just less traction in terms of people trying to actually take something. Is the fixed income
space benefiting from that movement?
Yes.
Or stand still by investors?
Well, like I explained earlier, we've seen more movement from equity to short-dated instrument.
Okay.
You know, so if you look at it from that space, you say you've seen more movement from equities to T-bills, and maybe part of it going to fixed income, bonds. Any
thoughts on why the CBN held back on the intervention that we were expecting to see during the last trading session? Was it the OMO was supposed to hold?
They've been doing a lot of OMOs. The only thing is just that they actually slow back in the issuance of the one-year paper for some time. And after we have that much of liquidity glut in the system, they came back to issue, to float another OMO. So we've seen a lot of issuance in that space. So intervention actually been very good.
So oil prices, are we seeing direct impact on the fixed income market or the FX market?
I think eventually we're going to see that.
They're looking all rosy in that department.
Yeah, I think eventually we're going to see that. Oil prices actually going up. It's actually crossed the $70 per barrel benchmark for now. I think it's trading around 74 to 73.
It's on 2019 highs as of this morning.
Exactly. I think the last time we actually got to this level will probably be around 2015. So I think we're almost about the same level we're in 2015 now. Apart from the high we actually witnessed in 2014, which went as high as 80 and 100. So I think the reason is because of all the issues that we have in Venezuela. We had a lot of issues, political issues in Venezuela, which is actually
the dynamics are actually quite hilarious if you decide to go into details of those.
Exactly, and you've seen the U.S. president actually coming out to say they're going to waive sanctions for all the countries that are actually buying oil from Iran. You have countries like Japan, China, Greece, South Korea, and some of these other countries. So if that actually comes to bear, the possibility is there that you're going to see much of that increase in price.
The market will benefit from that. So outlook for trading post-holidays now?
Well, I think what's going to shape this market this week is going to be the auction for the bond. We have DMO actually floating the 5-year, the 10-year note, which is a new note, and a new 30-year. Nigeria has never issued a 30-year bond, so this is going to be the first time a 30-year bond is going to be issued. I think it's going to be very interesting to see how that plays out at the end of the day.
Talk about going to be very interesting. That's a bit vague for me. How do you anticipate, given the current dynamics, that investors would respond to that? Is there appetite for that kind of instrument at this time?
I think if you look at the interest rates scenario right now, what is playing out, I think it's the right time to come to the market because interest is actually very low. And you're seeing the DG of DMO actually talking about borrowing at a very cheap rate now compared to what they used to before. So now is the time, Steve. So I think it's the time to actually do this.
Thank you for your time on the show. Steve Osho is the co-managing partner at Comercio Partners.